Hello, traders. It is Monday, 7/15/2024. Halfway through the month of July, more than halfway through the year. We're flying along. Excitement over the weekend with the whole assassination attempt on President Trump. What did that do to the markets? Well, initially this morning, we got a pretty good little, what I call the Trump bump. And essentially, I'm not going to be political here, so you guys do whatever you want with the news. However, and how everyone interprets the news, who cares? Okay, because it's everyone's just opinion. However, if you feel that this weekend solidified Trump's presidency because it looks like a lot of people, hey, the debate kind of swung things towards Trump's direction anyway, and Biden's just been failing everywhere. And then you get an assassination attempt, and the man is resilient, gets up, pumps his fist in the air, pumps everybody up. Okay, now everyone's thinking, okay, it's a lock, it's all over. So how are the markets going to react if Trump is even more of the sure thing potentially this fall? And again, I'm not being political here. I'm just looking at it from the market standpoint. Well, it's got to be good for the market. Okay, he's pro-business. Anything is going to be good for the market. It's got to be good for the US dollar. It's got to be poor for Chinese stocks. Okay. And we take a look at what happened in the market today. Well, we initially opened and gapped higher, and then we ran higher for quite a bit. So there was a good, Trump bump at the very beginning. Then things just cooled off. Still ended up for the day. S&P on the day up 16 points, 0.28%. Still an up day overall. If we take a look at the US dollar, it was up a fraction today. And then if we look at the third leg of things, that was I'll take a look. Let's even look at oil. Now, oil was fractionally just barely flat today. So you think, maybe oil also moves a bit on this because obviously Trump is fairly pro-oil, and you would think that this might be good for oil as well. All right, so looking at all of those things, they pretty much all happened today, but for the most part, small day up. But for our accounts, pretty nice day. So we did end up decently today, and we closed two good trades. One was a 0 DTE iron condor that got a little close to being tested early on in the trade, or middle of the way through the trade itself, as the markets were just going up and up and up. And then the markets finally got some rational thought back into them and started to tail off. So we actually closed it for a full winner there. So that was a good trade. And then we also closed yet another strangle. So Stranglepalooza continues. I believe we're now 39 of 43 strangles. We'll double check that and take a look in here for the year. We have 39 winners out of 43. We love strangles. So one of my favorite trades. So lots of little movements in the markets today. Let's talk about those. And let's get into our account. And then I'm going to talk about a few other things as well at the end. So stick around, because after I cover our account and what's going on, I want to talk to you about what I feel is one of the most important consistency metrics and things that you're going to want to adhere to. And we're going to talk about chasing the shiny object. All right, so we'll get back into that. But let's take a look at the account today. We finished today at 456, 0.09%. Again, still very delta neutral, still positive on delta, but delta neutral overall. Theta sitting at 1351, 0.25%. Not bad, considering that VIX is sitting right at 13 and pretty much flat and dead. All right, on the net lick today, we're up, we're actually down 150 points, but so 531,051. We're right there at all-time highs. We're just a fraction away from all-time highs, which we set on Friday. So Friday, new all-time high, and we're just off of that today. Overall. And then BP usage dropped today because we did close out a strangle trade. So that BP came off. We're sitting now at 45% of our BP being used, and we got to put it to work. So I always really want to be at that 50%. I know we're overbought, but I think we're hedged pretty well. I think we're going to take a look at our hedging a little bit more. I'm not going to add more, but I think what we've done to structure this account is really, really great. And I love where we are. I was actually looking at the risk analysis today on this account. And I think with one more little tweak, we are in perfect condition for a 20% vol spike and maybe a 12% sell-off. I think that puts us almost at a break-even point. I don't know if we would actually make money on that move, but we're close to that. And I love the way we've got this set up. All right, so BP, we have BP use, and then buying power. Or I'm sorry, on a realized, we booked another 23.75. So what has that done? Now, we are now sitting at $25,825 for the month, and it's only halfway through the month. Plenty of things can happen. We can lose some strangles. We can lose some other trades. Market can tank. Who knows? Lots of things can happen the rest of this month. However, right now, if the market closes for the rest of this month and we don't make another trade, this is now the #1 trading month that we have ever had in this particular Income Navigator portfolio. So this portfolio is now having its best month ever, and we are now up 4.3% on average per month. We are up 27.8, almost 28% for the year, while the S&P is up 18% for the year. Our net lick's up 25% overall for the year. So we are way outpacing our 3% monthly goal right now. And we take a loss here and there, but we really just keep plugging away. We're in great shape for the month of July. 10 grand worth of 112s, almost 5,000 worth of strangles, almost 3,000 in other 112s. The XL 112, about $1,600 to the good there. 0 DTE, we had a little bit of a comeback today, so we're still down fractionally, but also not too bad for 0 DTE. Our naked puts, almost 4,800 in naked puts. We've taken in over $800 worth of bill distributions, and our spec trades, $748 again, 25,875. We are 10 grand ahead. But also, if you take a look at our totals for the year, we're now up 118,491. So we're well over our $100,000 mark for the year, which was not our goal, but it's always nice to get that first 100K in income booked for the year. And we're only halfway through. We still have a shot at a $200,000 income year in this particular account. So pretty excited there. Our goal up to this point has only been 96. So we're actually $21,000 ahead of goal with 3 months or with 6 months to go. So pretty excited. And then overall, if you look at the win rate, we're at 91% win rate. We've had 218 trades, of which 198 of those have been winners. We're doing exactly what we want to do. I mean, we are exactly where we want to be. I love the setup of the account. I was actually talking about that today with some of the members. So we were talking about my account setup. I have all of the long-term 112s on that I want to have on. So right there, we're full, we're booked. They're set up exactly the right size. Everything is textbook from that standpoint. Strangles, we've got all of the strangles and a few extras that we planned on. We've got all of our 112 trades on that we wanted to have on. We've got XL 112 and XL 111 trades that we have on, and we're adding that more to the core strategies that we're going to be doing. So I actually modified some of the trade plan today. We've got our naked puts on in ES. We've also got some naked puts in a few other underlyings that we've got trading. We've got a hedge on. We've got a ton of PDS just sitting there as hedges as well. And we've got our bill. I'm going to be moving up my percentage of bill slightly. I've been at 10% of net lick for a while, but I think I'm going to go to 15. Okay, probably just before the market starts to sell off, but I'm probably going to go up to 15. We'll let that thing simmer there for a while. We'll play it by ear. 10's been very good. We have no problems with our margin. We have no margin issues at all here. I'm looking at my maintenance. I've got more than enough cash in this account. As it grows, okay, we're even in better shape here. It takes money to make money, and this particular account, which we started at 30 grand, we pumped a little bit into it, but it's had a fantastic 5-year run so far, ridiculously good here. And even in our active trading service, that thing is now up. We've made now we hit the $5,000 mark today, so we've now booked $5,000 worth of gains in that. So we're up 5% in just over a month or so in that particular account. So all good stuff. But what I want to spend some time on today with you is really talking about the perils of chasing the new shiny object in trading. So there's always this temptation to chase the new shiny object. And I know I've talked about this before, but I'm going to talk to you about it again because I just keep seeing stuff over and over and over, and I can't get it into people's head to stop this. Okay. You see the latest trend, the latest strategy, some kind of tip that promises quick and significant returns. Now, again, it might seem like an appealing approach, just jumping from one style to another because somebody's posting something that's hot. Okay, but it's really going to kill you in the end. Okay, and here's why. Number one, lack of consistency. Every strategy comes with its own set of rules, its indicators, its market conditions. As you switch from one strategy to the next, to the next, to the next, you can't really build the experience to trade effectively. Okay? You're bouncing too many. I see it in my own Discord. We have a lot of contributors. We have a lot of members in there. Over the weekend, maybe some member posts that he's having success with a particular trade or a hedge, and now everyone wants to link to this hedge, and everyone wants to put on this particular hedge because they think it's better than the hedge that they're doing. Or there's a trade that someone posts, or they're having success, or they're up 20-something% this year, and everyone wants, well, what strategy are you trading? Oh, what's that? Okay. There's too much going on. In fact, in our own Discord, there's just too much going on. We're giving too much information. We give members the platform to share their own stuff, and that really becomes, I think, extremely dangerous, especially from new members. I had a new member today. Hey, what's this particular trade, which is a newer trade that we're doing? It's the XL112. If you're new, you shouldn't even be there yet. You should be starting with the core of putting your trade plan together, understanding maybe the long-term 112 or strangles or ratio spreads or whatever trades you want to do, or leaps or campaign style trades. You should be focused on the basic core trades that you need to become successful before you start trying to figure out what are all these other trades that I or someone else is doing. So you can't be consistent if you're going to pop from one trade to the next. All of a sudden, somewhere on Facebook, some guy posts my 6-month results, and now everyone wants to know his trade plan, because now all of these people are going to switch and give up whatever they've been doing to go follow some guy who had a good 6 months. Okay. If you haven't had good 6 months, okay, you are not a very good trader. Okay. The market is up 18% this year. 18. The S&P is up 18. What did we say it was just a few minutes ago? 18.8%. Okay. The market itself is up 18.8%. If you're not up 15, 18, 20% this year, you're not a good trader. Okay. You probably shouldn't be trading. Okay. Because if the market is only going this way, okay, all you have to do is just buy the basic stocks and boom, they keep going up. Okay. So number one, everyone's got good results this year. I have good results. Everyone's got good results. Joe Fabitz in Tabichi Land's got great results. It doesn't matter. Okay. You don't need to go chasing anybody in a bull market because everyone's got good results. Number two, increased stress and emotional trading. If you're chasing new strategies, it's going to lead to increased stress. It's going to lead to emotional trading. You're going to make impulsive decisions. You're going to be either FOMOing or you're going to panic out of it. You're going to make terrible decisions. And it's someone else's strategy. If it doesn't make sense to your plan or your risk tolerance, don't be doing it. Okay? I have a 120-day naked put trade that I put on. Okay? Doesn't mean you should, and doesn't mean you should start popping it in any other underlying. It's designed for a specific underlying and has a specific set of plans. Well, the way I trade that one is I go to this delta and I do it on this underlying. Great. Okay. But if you're just trying to get your plan together, stop watching what everybody else is doing, tune it out, focus on you, and get it going. Okay. Statistical evidence of failure here is, according to the National Futures Association, 70% of retail traders lose money. Okay. You've also heard that 90 or 92% of traders fail at some point. Most traders lose money. Okay. If you haven't made money this year, trading may not be for you, or B, stop trying to chase what everyone else is doing and just get back to the basics. If you just owned SPY and maybe that's all you did, you'd be up 18% this year already. If you sold naked puts on SPY, you'd be up even more. Okay? You don't have to get fancy. Okay? One of my strategies is leaps on SPY. It's a great strategy. Okay? On average, it's going to double, triple, or even quadruple what the market is doing. Why? Because I'm using leverage and I'm taking advantage of the fact that the market has drift upwards and we make money, and because we're losing options and futures potentially, we've got great leverage, so we're going to outmake what the market is doing. Boom, done, be done, hang it up. Okay. In one of my accounts, that's all that I do. Okay, there's a secret for you. All right, so in one of my accounts, that's all that I do, and I can guarantee that account makes a lot of money. Okay, but it's boring, and if that's all I talked about, no one would care. All right, the next piece here is, again, 70% of traders are going to lose money. Most of the reason is that you lack a consistent trading plan. You're following other people out there. Don't follow me even. Don't follow anybody, okay? Put something together that makes sense for you. Sure, you can take a look at what people are doing, but, oh, send me your trade plan. Can you post in the Facebook group? Can you post what you're doing? Outline your plan for me. What, so you can copy someone else's trade that makes no sense for you? Okay? In the last 6 months where everybody and their brother has made money? Okay. Traders who frequently switch strategies are more likely to fall into this losing category because you never really master anything. Okay. I ask members to not even trade. So for at least a week, I don't want you to follow a single trade that we put on. Please don't do it. Maybe 2 weeks would be even better. Okay. Number one, read and learn. Okay. We are an educational platform. I want you to learn to fish for yourself. Okay. Stop listening to everyone else and their opinions. All I see in our chat is opinions. Oh, here's my opinion. Here's what I think is going on. You shouldn't do that. You shouldn't trade Strangles. You shouldn't use this. You shouldn't do that. Okay. Why? Because you guys all know it all? I don't know it all. Okay. Stop giving your opinion. And everybody that's in there, just start tuning these people out. Okay. The people that are posting giant profits, tune them out. The people that are posting all the time on how they know everything, tune them out. Okay. Stay focused on what makes sense for you. Please stop chasing this shiny object. Okay, mastery. Number one, mastering just a few strategies is going to allow you to create a deep understanding of the market, its behaviors, its patterns. Understand it. I know the S&P very, very well. I know oil very, very, very well. I know gold very, very, very well. I know bonds very, very, very well. Okay. If you're going to ask, oh, Tom, what do you think about live cattle? I don't know. It could be a good trade. Okay. Chart looks good, looks fine. Okay. I am not an expert on live cattle. Tom, what do you know about wheat? I don't know squat about wheat, except I know that it grows in a field. Okay. And if it's too hot, okay, it's going to die. And if it rains too much, it's going to die. Okay. Same thing with corn. Same thing with soybeans. Okay. Lean hogs. What about lean hogs? I don't freaking know anything about lean hogs. Okay, so I'm trying to nat gas. The charts are great on nat gas. Look, I'm making money. I've made money all year on nat gas. I hear that all. Good for you. Okay, I'm not trading it because I don't know enough about nat gas except to know that A, they call it the widowmaker, and B, there's a reason they call it the widowmaker because people freaking die by trading that thing when the market goes wrong. Okay, do I want to trade something called the widowmaker? No, thank you. Okay, even though I've done it and I can understand it and I feel like I'm a pretty doggone good trader, I don't need to understand 90 different strategies. Okay. Just because you're good at swing trading doesn't mean you're good at day trading. Just because you're good at day trading doesn't mean you're good at zero DTE trading. Because you're good at zero DTE trading doesn't mean you're good at a long-term 112 or a 112 trade, or that you understand how to manage risk or adapt yourself to different market conditions. I have trades that shape themselves based upon the market and my account. Okay. They're not just all cookie cutter. Right? Achieving this level of mastery is difficult if you're constantly just switching between all kinds of different methods. Okay. Next thing here, discipline. Discipline is the cornerstone of successful trading. I mean, you've got to be disciplined. Sticking to a limited number of strategies is going to help you follow your trading plan, manage your risk, and avoid over trading. If you're popping from one thing to the next, to the next, to the next, okay, how are you going to become an expert at one? How are you going to become disciplined enough to trade each one correctly? Okay. You've got to have patience and really a little bit of a long-term growth mindset. Okay. And then building confidence. And how do you build any confidence when you're constantly bouncing from one trade to the next? Okay. Committing to mastering just a few strategies helps you build confidence in yourself and in the markets. Okay. It's going to reduce the feeling of being overwhelmed. It's going to be easier to understand just a couple trades and not listen to this vast array of trading options and all kinds of info. Okay. You want to be focused. You want to keep it a focused approach. Okay. And stop chasing the shiny object. I could go into Discord right now and I'm going to look at the main chat and I'm going to say, I'm going to see if in the last 10 minutes someone has posted something, and here you go. Okay. Okay. I just did this. I've just placed this trade. Okay. They're getting all kinds of advice from people. Don't do this. Oh, by the way, don't do that. Don't trade this thing. Don't use PM. Okay. What are you guys using for stop losses here? And then you get 90 people telling you how to do your stop loss. So you can't get focused. I'm giving you the roadmap to success. I don't know why you have to bounce around to 90 different things. Get successful, be making 10, 20, 30% a year every single year for years, then start looking at other things out there. Okay. I'm sure if I went to Twitter or Facebook, I'd find even more crazy stuff. Okay. Hey, here's a trade that's broken out because I won on a trade last week. I'm going to post a trade this week, and you're probably going to follow it. Why? Because someone made money last week when the market went up. Okay. The market goes up every time. Okay. Okay. At some point, we're going to get a pullback. But again, it doesn't make anyone a genius to trade when the market's up 19%. Okay. It just makes it easier for you to pick those limited strategies. So stop chasing the shiny object. Focus on one or two strategies. Keep it simple. You don't need 90 hedges. You don't need the Black Swan hedge or the Fred hedge or the Joe hedge, okay, or the Tom hedge or anybody else's hedges and things. Or I got to shape this trade so it turns into a gigantic hedge, and it's worked for me for 3 months. Call me when it's worked for you, okay, for the last 20 years, okay, and then we'll be fine. Okay, then maybe I'll take a look at it. I don't care what anyone else is doing. Okay, if you have tweaks to some strategies that I'm doing, great. Am I going to scrap everything I'm doing? Nope. Okay, I'm going to test. I'm going to trade. I'm going to trade for months before I adopt anything that's out there. All right, so I hope this helps you. Stop chasing the shiny objects. Stick to the basics. I've got 2, 3, maybe 4 strategies at the most that I'm employing. Okay. If I'm an active trader, I've got 2 strategies I'm using. I'm using credit spreads. I'm using call butterflies. That's it. Okay. And I've got a great win rate, and I'm up $5,000 in just a couple weeks. Okay. Why? I don't need 90 strategies. I don't need the broken wing butterfly, upside down cheesecake trade, or whatever the heck that is. Okay. I don't need to buy calls. I don't need in the money, out of the money. I don't need all of these different gizmos that people are doing. I don't need to do the wheel or the spoke or the flat wheel or the flat tire or whatever the hell it is. Okay. Just pick 1 or 2 strategies, find the stocks and setups that make the most sense for those strategies, and go ahead and put those on. You're going to be much more profitable. You're going to be much less stressed, and you're going to see your wealth grow. All right. If you like this video, click the like in the like button down below. Give me a thumbs up on this thing. Could really use that to help reach other people. If you want to leave a comment, leave another comment. What did you get out of this entire diatribe that I just put on? What's a takeaway for you? Pop it in comments down below. I'll give it a heart if it's good, and I'll help you. I'll comment on it as well. All right. And if you want to come see what we're doing in the Discord, go into the description of this post. You'll find it there. Sign up if you want to. If not, keep trying to grab the free stuff off of YouTube here, and I hope it's helpful for you. Just don't keep bouncing from one guy to the next because somebody posts a headline of, hey, I made $50,000 today. Okay. And then you're going to go copy their strategy, and then you're going to fail at it, and then you'll be back here again in a couple of weeks. We'll see you then while I'm trading these same exact doggone strategies that I've been trading for years. Have a great rest of your day, everybody. Stay safe. We'll see you later. Bye bye.